Trader, Tina here once again from ShortMeTina.com with my daily recap. Happy Monday. So we're back into the swing of things. Today or this week marks the official first full week of September, and we're about to wrap up the third quarter. So like I always say, it's super important to do sort of a performance or portfolio analysis. You want to take a look at your last trades to make sure that, you know, things are okay and to see what sort of themes emerges and what you can essentially find out about your trading. So ensure that you're reviewing your trading performances, checking out both the trades that actually worked out for you and the ones that didn't. Obviously, you want to do more of the trades or replicate the trades that are that have worked out for you and less of the trades that have not done so well for you. And again, see if you can find a theme, especially in the ones that have worked out for you so far. Consistent and continued analysis is really the only way you're going to get better in the stock market. All right, so before we get underway with a recap of the overall market, let me welcome you. If this is your very first time tuning into a ShortMeTina video, I'd like to say welcome. Do us a solid. In the comments section, you can drop us your name, say hi. If you are returning, I'd like to say welcome back. I know you can be doing so many things right now, but in this moment, you choose to spend it with me, and for that, I am grateful. So right now, what you're looking at is the SPY S&P 500 daily chart dating back to 2017. So that spans about close to 2 years. We closed at 298.20 today, up essentially 0.05% or flat on the day, but very much so above this range that we've essentially established since the beginning of August. So again, we're essentially flat on the day on below average volume. So in my opinion, not too much can be made of that. What I'm paying attention to, again, as I've indicated before, for the remainder of the third quarter, for the remainder of the month of September, possibly going into the fourth quarter, essentially is whether or not this breakout that occurred about three trading days ago can be sustained. And right now it is sustained, sitting here at 298.20. We're above the upper end of that range of 294. So if we can essentially stay above that 293 to 295 level, somewhere around there, if we can actually get above there and stay there, then for me, it looks like the market wants to go higher, and it perhaps will revisit all-time highs of around 302. So sitting here at 298.20, we're not too far off of all-time highs. That essentially is not necessarily the most bearish of things. So, but is this market rally ready and underway? Not convinced 100%. Yes, I am still short, but so far it does look relatively promising, but not completely out the woods as of yet. So that's what I'm paying attention to with the SPY. What else? And then we have the IWM daily chart, also dating back to around 2017. So you're looking at about 2 years worth of data. Fared a lot better than the SPY today, up about 1.34%, I believe. On about average, slightly below average volume. If I am incorrect, please make sure to correct me in the comment section. So we closed at 151.91 today. Essentially, like, okay, so you see how the SPY again has broken out of that range. It has been trading in since the beginning of August. The IWM, fortunately, remains within that range, even with a north of 2% gain on the day, even with the close of 151.91. We still remain within this box. For things to get going, obviously with the IWM, you want it to break out and eventually get close or retest that really huge psychological wall that has been a wall for the past 2 years of 160. We're not too far from there, but we are a ways from there. If we can get above that again, with confirming volume and a sustained break above that 160, for me, that would make the overall markets look promising in my opinion. So right now, still within this box, not much to do in terms of anything really, just kind of paying attention and waiting for that either rally to the upside or rally to the downside. Right now, I don't think that the market really knows what it wants to do. So it's essentially just been trading within this well-defined range for about 2 years. When it eventually gets out that range, and I think wherever it leans, that's where your portfolios should be structured. So if we break down support, then I'd be looking to really take some short positions. If we rally above 160, then I think it would be good to actually start going strong with your long positions. What else? All right, so let me provide an update on JD. I have not done one in a while, and yes, I still hold a long position. It's up about 1.2% on the day. Again, this is a daily chart dating back to when the stock IPO'd back in 2014. So let me just kind of zoom in on price action here, we closed today at 31.48. So we're essentially been hanging out around that resistance level of $32, let's say $32 to $33 for quite some time. So for me, that is a relatively good thing. As long as we can, I mean, granted, obviously you would want to get above, not underneath, but the fact that we've been hanging around there just means that any sort of surge in volume and push, it wouldn't take much to break above those levels. So hopefully it's actually kind of gearing up to do that right now. I still think, relatively speaking, the chart looks very bullish, but obviously for it to start trending up or trending up even more, we need to have that sustained break above that $32 level. And so if you go back to around August of 2018, so essentially a little over a year, we really have not traded above that $32 level, hence why I think it's of significance and importance for this particular security. So again, I am long. Granted, I would like for it to be above 32. It's not, but it's not necessarily too far from that level. So just waiting for a surge of volume to come in, perhaps on some sort of good news, and I think it'll actually sustain that break above 32. And I think if it can do that, I think we can go from 32 to 40 in a relatively short period of time. So if you're on the sideline looking for a potential trade, I think you should put ticker JD on your watch list. I probably wouldn't buy it here. I'd wait for that confirmation. Again, that surge in volume and that push above 32. And I think if we can get that, I think that this security can actually run to 40 in short order. So I'm still bullish and I'm still long. What else? All right, and so let me provide a really quick update on ticker ZNGA, Zynga daily chart dating back to around 2013. So we're off about 2% on the day. You see a quote here of $5.74, and I'll try to break down Zynga. And yes, I remain long. Yes, I still think, relatively speaking, the chart is bullish, and yes, I still see a price target of around $8, again, just based on the chart. So I have some annotations here or notations, essentially what I'm paying attention to with this particular security. Again, it's a daily chart dating back to 2013. The first breakout came about in January of 2019, this year. And just let's put some things into context, right? Less than a year ago, right? Around November of 2018, this stock was trading at around $3.30. With the most recent high of around $6.55, you're looking at north of 100% in a stock in less than a year. That's really great. That's not easy in the market to get a stock to go 100% in less than a year. So that off the bat is great. What it tells you is that the stock needs to digest that move and cool down. Now, it can mean that the stock, that's all it has to give, and it might trend lower. That is always a possibility in the market, and you have to account for that. But right now, paying attention to this chart, nothing really screams bearish. So you had this uptrend that lasted for about a year. You had the first breakout again that occurred in January of 2019. Why is it a breakout? Because if you go back to May of 2014, about 5 years, the stock essentially traded under that $455 mark. Fast forward 4 or 5 years, and you actually had a push above that mark with confirming volume, so new buyers are stepping in. So we continue to trend up, and then we had our second break a little bit earlier this year, or mid 2019, around May. Right? And why is it the second break? Well, if you go back to 2014, you'll see that March of 2014, you had like that 550, 580 level serve as resistance, right? So we actually broke above that in May. Once again, with volume, we bounced around from, let's say, that let's change it a little bit. We bounced around from that 580 level to 650 for about 2 to 3 months, and we actually broke it. Now, if you're a shorter term trader, obviously you would have actually gotten out of the trade once it broke 580, 590. If you were a shorter term player in this particular trade or stock. But if you're kind of a position trader and you got into this trade several months ago, like we did in the in the premium member community, we actually took this trade when it was trading in the threes, then you actually have room to work with this particular stock. So here we're sitting at 574, and it once again, I kind of highlighted here, if you go back to around August of 2019 in this highlighted area, we're once again, let me move this, right? we're consolidating, we're trading within a range, pretty well defined, right? As far as I'm concerned. So we can say that range is anywhere from $5.50 to around $5 and let's say 90 cents for argument's sake. So for things to get back on track for Zynga, me personally, I think it really needs to get above that 580 level, preferably around $6. If it can actually get above 6 and sustain that, then I think it's ready and it's on its way. The fact that it's hanging out here doesn't really bother me. Again, it just needs to get above. Hanging out here is not bad in my opinion. You can still see that we're still trading above significant levels. All right, so that's my take on Zynga. Still bullish, still long. What else? All right, and so let's recap ticker ACAD. Huge winner on the day. Congrats to the bulls. Stock is up about 63%. Before we continue, this is a daily chart dating back to 2018, so about a year's worth of data. Again, daily chart up about 63% on the day. Huge move. Stock went as high as 43.98. The low of the day clocked in at 36.62. We eventually closed at 38.85. You can see volume here. A bit cautious if you're looking to get long, or if you are long, maybe you should have locked in some profits. What I'd be paying attention to heading into tomorrow and the remainder of the week, obviously, would be the low of today, which is 36.62. If we take out that low, right, and it looks like we will based on what I'm seeing now, if we take out that low, I suspect that the stock will pull back a little bit more, perhaps to the upper 30s. And I'd actually, kind of wait and see what happens after there. Because if it pulls back to the 30s and it doesn't dip below, you might actually get another or secondary run with this particular stock. So first things first, paying attention to today's low of around $36. Heading into tomorrow, if we take that out, chances are I think we'll see a pull back to 30 again. We had a huge move today. What else? All right, so let's wrap it up and round it out with ticker NTRP daily chart dating back to October 2018. We don't necessarily need to pay attention to that. We can pay attention to price action today. Stock is off. And let's just look at the hourly chart for now. Stock is off about 77% on the day, right? 77% on the day. You can see this huge gap down. One of the reasons why I don't particularly like trading penny stocks, it's trading at all-time lows. Again, any stock that sheds over 70%, north of 80% in one day is a stock that I do not want to go anywhere near. However, since the stock is down about 80% on the day, chances are you're going to get that dead cat bounce, right? Dead cat bounce, usually when a stock sells off by an enormous amount, you usually have a day or two where it's up about anywhere from, let's say, 5 to 15%. And that might actually be the case with ticker NTRP based on the hourly chart and based on, you can see buyers stepping in here throughout the day. So we closed at we closed at $1. The low of the day, which we essentially kind of experienced within the first hour or so of trading, was around 82 cents. So do you think, you're asking whether or not we're going to get the dead cat bounce tomorrow? Well, I would be paying attention, obviously, to today's high of around 103. We closed relatively close to today's high, right? We closed at $1. So definitely want to pay attention to after hours. I didn't get a chance to look at it. Pay attention to after hours, how the stock sort of acts in pre-market, and you want to pay attention to today's high. If we can take out today's high in pre-market and when the market actually opens up tomorrow, chances are you're going to get that run. I wouldn't be surprised to see this stock sitting at 125, maybe even 130 within the next few trading days. But again, for me, the overall theme right now, the stock is trading to the downside. So I'd stay away. But if you want to brave it and you want to be bold and you're looking for that dead cat bounce, then you might want to pay attention to, again, what's going on in pre-market tomorrow and at actual market open. If we can get above 103, I think you can potentially see a run. All right, so that's my take on ticker NTRP. So that's kind of it. Let's wrap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do 3 things for me. 1, comment in the comment section. What do you think about my analysis? Are you in any of those trades? Again, comment in the comment section. That's the first thing. Secondly, I do videos Monday through Friday. If the stock market is open, expect a video. If you don't want to miss any, ensure you are subscribed at our YouTube channel at ShortMeTina. There's been sort of like a downtick, quote unquote, in subscriber rate. Let's try to get to 2,000 before the ending of let's try to get to 2,000 subscribers before 2019 wraps up. So if you liked any portion of this video, ensure to subscribe at our YouTube channel channel at ShortMeTina. And lastly, my friend, I've been trading for well over 15 years. If you think you can learn anything from me, then head on over to our website. I'm like fumbling my words, I guess, because I'm talking so fast. So head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening. And as always, thank you for the support. I'll talk to you tomorrow.